Sam Bankman-Fried. He's the CEO of the cryptocurrency exchange FTX.
Executive Sam Bankman-Fried is urgently working to save cryptocurrency exchange FTX.
Bankman-Fried is facing fraud charges, which he denies, and he has pleaded not guilty.
We have a few billion on our balance sheet right now. We are profitable.
Anyone familiar with the cryptocurrency and digital asset space knows it's prone to volatility and massive price changes. This innovative investment class commonly increases or decreases hundreds or even thousands of dollars in a matter of days. This occurs so often that many in the industry have become accustomed to large, rapid price changes. However, the past year and a half have marked one of the most tumultuous times for the sector. From the market cap of the entire crypto space peaking at around $3 trillion at the end of 2021, to dropping a staggering $2 trillion around 6 months later. This massive decline resulted from the fear that the Federal Reserve would continue its aggressive interest rate hikes, supply chain issues, the conflict in Ukraine, and the collapse of major crypto companies like Celsius, Three Arrows Capital, and Voyager Digital, among other issues. It seemed that the crypto space was receiving a non-stop influx of bad news following its peak. Though it persisted as massive price shifts are something crypto is familiar with, this just happened to be on a larger scale. Just as the space began to slowly regain some momentum following the onslaught of crises, it took another unexpected hit. In November of 2022, FTX, the third largest crypto exchange by volume, swiftly collapsed over the course of 10 days. FTX was a cryptocurrency exchange and crypto hedge fund founded in 2019 by Sam Bankman-Fried, or SMB, and Gary Wang. At its peak in July 2021, it had over 1 million users and was one of the most prominent exchanges in the space. However, all was not as positive as it seemed. It started on November 2nd, 2022, when CoinDesk, a prominent crypto-based news site, reported that Alameda Research, a trading firm also run by SMB, had a $5 billion stake in FTT, FTX's native token. It was also reported that Alameda's investment foundation was in FTT, not fiat or other cryptocurrencies. This was troubling as all of its assets were tied to FTX. Many were also concerned with SMB and FTX's undisclosed leverage and solvency. While the report was concerning enough, things really took a turn for the worse when Binance's CEO Changpeng Zhao, or CZ, sold all of the exchange's FTT tokens, valued at around $529 million. CZ made the decision to sell all of Binance's FTT after hearing the news as a way to liquidate the exchange's FTT position for risk management's sake. The situation only worsened as customers demanded withdrawals of more than $6 billion following the CoinDesk report, causing the value of FTT to fall by more than 80% in 2 days. After the massive sell-off from both Binance and FTX customers, SMB announced a liquidity crisis and turned to venture capitalists and Binance to seek a bailout. Following this, Binance announced that it had made a non-binding agreement to buy FTX for an undisclosed amount to bail out the exchange, though this was short-lived. Only a day after announcing the agreement, Binance backed out of the deal. The exchange stated that they had backed out of the deal after looking into FTX more and realizing there were numerous issues behind the scenes, including the mishandling of customer funds. After it was revealed that SMB was looking to raise around $8 billion to bail out FTX, the Bahamas securities regulator froze the assets of FTX Digital Markets. The California Department of Financial Protection and Innovation also initiated an investigation into FTX on the same day. SMB came forward and publicly apologized for the liquidity crisis and admitted that FTX's non-US exchange could not meet customers' withdrawals. The then CEO of FTX attributed the issue to miscalculating leverage and liquidity due to poor internal labeling. The stream of bad news led to SMB stepping down as the CEO and being replaced by court-appointed FTX CEO John Ray. FTX filed for Chapter 11 bankruptcy protection the same day, revealing that around 130 other companies affiliated with the exchange were part of the proceedings. The filings indicated that FTX had assets and liabilities between $10 to $50 billion. The bankruptcy affected numerous investors and customers, leading to the loss of billions that will likely never be recovered. Things became bizarre and raised a lot of suspicions when only hours after the bankruptcy being filed, FTX stated that it was the victim of unauthorized transactions and would move its digital assets to cold storage for security. It was estimated that around $477 million was stolen in the FTX hack. The hack continued for several days, draining numerous wallets. Analysts observing the hack called it, quote, on-chain spoofing. It is reported that the hacked capital was reinvested in Ethereum. It should be noted that many suspected SMB of perpetrating the hack, though this has never been confirmed. Legal action was finally taken on November 16, 2022, when a class action lawsuit was filed, alleging that SMB created crypto that took advantage of less experienced investors. The Securities Commission of the Bahamas then took control of the digital assets held by FTX and instructed SMB to move crypto assets to the regulator's wallet to protect creditors. SMB was arrested in connection with multiple fraud charges involving FTX on November 12, 2022 by Bahamian authorities. His charges included an indictment from the U.S. Attorney of the Southern District of New York. This was deemed by some as one of the biggest financial crimes in American history, with the new FTX CEO stating that FTX practiced, quote, no bookkeeping, calling it, quote, old-fashioned embezzlement. SMB pleaded not guilty to all criminal charges in a New York federal court. Despite his plea, SMB was extradited to the U.S. He was then indicted by U.S. District Court in Manhattan on 8 counts, including securities fraud and money laundering. SMB was released from custody on December 22, 2022, after his attorneys and federal prosecutors agreed to a $250 million bond, the largest bond posted in history. The former FTX CEO will live with his parents in Palo Alto, California, and is ordered to remain in the Northern California area and wear an electronic monitoring bracelet. SMB is set to face trial on 8 criminal charges on October 2, 2023. With the third largest crypto exchange by volume collapsing, it's unlikely that the space will recover for some time and will more than likely continue to feel its shockwave for the foreseeable future. This event was at the forefront of the crypto industry for months, with many companies going down with SMB and FTX due to their ties with the company. Many anxiously awaited as each day brought more bad news, which all accumulated in the arrest of SMB and the downfall of one of the biggest players in the space. It has shaken the outlook many have on crypto, especially those who aren't already part of the sector. The full effect FTX's collapse will have on the entire crypto space will not be seen for some time. One significant negative impact that has accompanied the exchange's collapse and will continue to do so for some time is a loss of confidence. With this being the biggest collapse in the space's history, many will be wary of investing. There were many investors and customers who lost billions, and it's unlikely they will ever recover their assets, which could lead to even more legal action, providing more than enough incentive for those afraid to join the space to stay away. Also, the U.S. Securities and Exchange Commission and other regulators have already scrutinized digital assets and the cryptocurrency sector due to security issues and innumerable hacks. The SEC and regulators may see the collapse of FTX as a reason to tighten regulations surrounding the space, and Congress may create new laws governing digital tokens and exchanges. This would cause a massive shake to the entire industry and could lead to many exchanges and other related projects shutting down. However, many are still working towards keeping the space unregulated while improving security and remaining hopeful that the market cap will return and surpass the all-time high seen in November of 2021. The current market cap of the crypto market is currently sitting at around $1.1 trillion, a far cry from the near $3 trillion seen at the end of 2021, but still much better than the $800 billion seen coming into 2023. Hope you enjoyed this video. If you want to be notified when we release more videos on the world of tech, subscribe and hit the notification button. Thanks for watching. Until next time.